Good morning, Steve Frayne in Chicago with the morning grain comments. We've got nearby beans up 2 cents while meal's gaining on oil. Corn down 8 cents while wheat's anywhere from down 5 in Minneapolis. It's down 18 in Chicago. Looks like stocks are going to open a little bit lower, dollar's lower, and crude is lower. I think some of the weakness in the commodity markets are based on the fact that most look for the Fed to raise interest rates. We'll have to see the conversation and see if they're continuing to talk about higher rates down the road to fight inflation, or if they're going to take a pause. We also noted that maybe the wheat and corn is on the defensive because of lack of new attacks on Ukraine ports, although there was talk that the Russians have mined with sea mines around the Ukraine ports, and that they may consider attacking civilian vessels. UK ministers met and trying to figure out a way to cover transportation costs and figure out some solidarity lane in which Ukraine exports could go. The problem is that Poland might be one of the biggest payers of this transportation costs, and they do not want to import any Ukraine grain, although they will allow it to be transported through Poland. So the uncertainty of the Ukraine situation remains trouble for corn and wheat traders and putting new positions on. As far as the beans are concerned, there is talk that China domestic crush margins are improving. Our board crush margins are near season highs. Meal, new crop meal, U.S. exports are up 32% from last year, while actual Argentina meal exports are down 30%. We're also seeing, at least up until today, a higher trade in soybean oil based on talk of higher demand for renewable fuels. We'll be watching pretty closely to see if China starts buying new crop U.S. beans and even a little bit new crop U.S. corn with the Ukraine situation and uncertainty. Also, in the wheat, domestic wheat basis levels continue to fall because of the lack of export demand. We also note that the first day of the spring wheat crop tour in North Dakota came out with a 48 bushel average yield. Normal is 40, last year was 48.9. We are going to get some rain, especially next week across Canada, but I think that's a little too late for especially the canola crop, but also maybe the spring wheat crop. Rapeseed futures lower in Europe because of harvest pressure, but in the Dalian futures, meal and all the vegetable oils are higher. We also noted that India may be considering dropping the import duty on edible vegetable oils, and India also had a record July record imports of 1.86 million metric tons, up 42%. So we're dealing with weather, we're dealing with uncertainty of the U.S. final corn and soybean supply, and we're dealing with lower demand for U.S. exports.